Good afternoon, everybody. Welcome to TraderMerlin Show for your Monday edition. I'm hoping that everything goes okay today. So you're going to have to let me know if something doesn't go right, like this light not being on right here. The reason for that is on Friday's show, actually, before we got to Friday's show, right even before I taught a class in the morning on Friday, and right near the end of my class, my computer just went, everything just flashed, and I thought, oh, okay, power went out, but I realized my studio lights were still on. So for some strange reason, my motherboard decided to blow. So I spent a lot of different, a lot of pieces over the weekend trying to figure out, is it the motherboard? Is it the, my RAM? Is it my power supply? What could it possibly be? Long story short, after working on it hours on Friday, hours on Saturday, got it running up on Sunday, and I basically bought a brand new computer. I had to rebuild the whole thing, so I got a new chipset, new motherboard, new RAM, and then I'm using the old power supply, but it makes a lot of noise. You can probably hear it on the show. So tomorrow, or actually tonight, as soon as I finish this, I'll be updating the power supply. So I have literally a brand new machine. Hopefully there's no bugs or kinks. You guys all hear me okay? Hopefully it sounds good, because I had to reset a lot of things here. A lot of stuff had to change, which is why I like the graphic for today. I said, show me a horse that's all digital financial markets. This one was really cool the way it did it. So I've got a picture of a nice horse here that is covered with maps and data and price charts. Look, I really like it. I think it's special. Anyway, let's get on to our topic for today and see what we want to get into. Obviously, I want to catch up on the mid-year wrap-up, kind of what has happened, where do we stand currently, and then what are your thoughts and forecasts for the markets going forward? Right? I tried to set up a annual challenge, which we will go and look and see who's winning that one as well, which I think is much higher than most people expected for this year, but we will give you those forecasts here in just a minute. So let's start off with our current markets, and then I'll dive back into the year-end review, etc. Well, cool. Thanks, Liz. You don't hear the power source. I hear it. It's driving me nuts, and I had to record some other stuff this weekend, so I'm just going to replace it all. Just about $1,000 to get everything top-notch the way that I wanted. So let's start at the bottom and work our way up. What I'm going to do is I'm going to go through today's markets, and then we'll step back and look at the month of June. I'll do a quick comparison between the month of June and the month of May, and then we will show you what's happened for the first 6 months of this year, which has been pretty much, just about perfect with regards to gains for everybody here, depending on what market you're in. Doesn't matter. They all looked really good. Okay, weakest performer out there today, Russell 2000 down 0.72%. And again, we talked about, or at least I had talked about it, kind of remaining within these two ranges. You kind of have the red bars there on the top and bottom, which identify your larger range. And then my belief is we'll probably stay within this kind of smaller yellow box for some time. It just feels like the Russell doesn't have any of the attention that some of the bigger indexes have. So Russell not performing that great today, down 0.3%. The dollar index, I'm going to call it unchanged, 0.02 slide. So just barely down, but again, technically there's not much happening here. We did have that nice bounce off this yellow demand zone, but it's hit that multiple times already. So now I feel like this is going to start to go range bound on us as well. Yes, Margaret, I fixed my computer myself. I think this may sound weird, but I think this is kind of why I love trading. I think I'm pretty decent at trading because I always try to fix my problems myself. I will go through and figure out what's wrong and process of elimination. So yes, I did fix it myself, and it was rather frustrating on Friday because I really knew what the problem was. But the funny part is one little tiny single pin wire is what was preventing my computer from starting back up again. So yes, I fixed it all myself. I find it fascinating to kind of break apart the hood, if you will, of a computer and see what makes it tick. They're actually extremely simple. It's just compatibility issues that you got to worry about. So we upgraded this system. For those who might be wondering, I upgraded to, if you want the specs, I can actually write it down for you, but this would be a phenomenal trading computer as well as a broadcasting computer. I have a Ryzen 7 AMD chip, which is the 7700X. I have a B650E Wi-Fi gaming motherboard. I have 32 gigs. I might upgrade it to 64, but I have 32 gigs of DDR5 RAM and then a 750 watt power supply. That's pretty much the main stuff. I have a solid state 1 terabyte hard drive and an internal 2 terabyte hard drive as well. So there you go. That's the specs for this computer. Pretty simple. Right now, all those components I mentioned, you can probably get it for, let's see, probably about $600. I had Tower and a bunch of other peripheral equipment that I kept from my old unit, but I may replace that as well. But great question, Margaret. And there you go. Now you got it. Godly Trading, welcome to the fold, my friend. All right, moving up the list. So the dollar index unchanged, feels like it's going range bound. Sure, I'll write it. Let me. I won't do it today, Chia. Let me do it on a different show, just because I don't want to take the time to type it all now. But yeah, I will do it. If you bought a new computer, how is that fixing it? Well, good point, Mike. I fixed the problem, which is a blown motherboard. Now, here's the thing. I could have taken that motherboard, replaced the motherboard, which would have cost me around $200. But I would have also had to replace that chipset, and that gets kind of tricky. And I just decided I'm going to go from a Ryzen 5 to a Ryzen 7 and upgrade the whole system. So I guess the only pieces that exist from my previous computer are my microphone, my monitors, my tower case, and all that stuff. But other than that, what GPU am I using? I'm using an NVIDIA 1660, which is a bit old school, but the thing, knock on wood, for me, works like a champ. Oh, Big Ab. Thank you, Big Ab. I appreciate that. Thank you very much. Yeah, I use an old NVIDIA. It allows me to do 3 monitors. That'd probably be the next piece that I upgrade. But remember, I'm not doing gaming, right? So if I wanted to, I could buy one of these, top-notch new NVIDIA cards, which is going to cost me $500-600. I'm using one, I think at the time was like $400, but now you can probably grab them for $150-200. But it runs 3 monitors and does a great job of it. I have not had one problem with my display computer here, so I'm a big fan of NVIDIA there. But yeah, I could bring it up here. It's called the 1600 NVIDIA GeForce 1660 Super, I believe is what mine is called. Great, here we go. I will do that though. I will write down just the list, so you guys can see. It's not a endorsement, but again, you can get away with a really good, powerful computer for a fairly decent price. Logged in late and heard something about a contest. No contest yet, Lisa. We're going to talk about our end of the year contest, which I'll have to figure out what the prize of that one is. I have an idea in mind, but I probably should have announced it earlier on at the very beginning of the year. That's right, Oliver. All hail NVIDIA. They really revolutionized things with the GPU. Everybody else was still on CPU, and they're like, let's go to graphics and do it, separate power. Man, pretty amazing. All right, next on my list was gold. These markets, I hate to say it, have been rather boring. There certainly are pockets of things that are moving, but we just looked at the Russell. Not that exciting, sideways, kind of flat. Dollar index actually has a pretty nice trend, although it just, hesitated today. Gold, sideways, not really that exciting, slowly drifting down for the past month and a half, but really nothing out of the ordinary. And then you have the S&P, which you've also drawn a little yellow box around, and my argument was until we get out of that range, leave it alone. And we did break above it on Friday's session, but we closed within that range again. So here we are. Just, wow, Lori, that was completely unnecessary, Lori. Wow, thank you. I appreciate that. I wasn't groveling for donations, guys. That was okay. I really appreciate that, Lori. That is extremely nice of you. Very generous of you. Man, I'm blushed with embarrassment at this point. Goodness. Thank you very much. I appreciate that. That means a lot. I'll put it to good use. I will name my my GPU, the processor that, or my chipset, the brain of my computer will now be called Lori. This computer is now called Lori. You just bought your name on my computer. Thank you guys, appreciate that. That was very nice of you. So again, I'm still the opinion of the S&P. Just stay away from it. Leave it alone until we see it break out of this range. Right? It's just traversing sideways, not really doing anything. So yeah, I would leave it alone. I totally am, Steve. I am blushing, and I'm getting I got really hot. Like I'm flushed with color right now. Oh, the humor of my world. Yep, that's me. Thank you very much. I appreciate that. Man, you guys are super, super generous. Let's go up that list even further. I get embarrassed easily, Lori, with things like that. Yeah. So going up the list, we got to the NASDAQ. NASDAQ, pretty much the same thing as the S&P, right? Just been kind of going, okay. Thank you, Gary. You started a trend here today, Big Ab. Here it goes. Great, now I'm going to talk to my CPA. Hey, what do I do with all these donations I'm getting? Thank you. I appreciate that too, Gary. I think hopefully you guys clearly understand that I appreciate you because I come and do this every single day because I enjoy it and I love the community we have. So thank you very much. I do appreciate that. Let's go on this list here. I'm almost at the top. And then we can kind of break down our 6 months and monthly and year. Sell us a book. Okay, that is. I had some discussions on that this weekend, so that's my next big thing. I just finished a huge, massive project for Trading Academy and another company, so I'm hoping now that is done, I'm really at the tail end of it. then I can actually take the time I was allocating to that and put that towards the book, which needs to get done. Actually, there's books that need to get done. So maybe I'll just put that towards that. All right. NASDAQ flat, boring, up 0.63% of the day. Thank you, Mimi. Man, floodgates have started. Here we go. It's kicking off the second half of the year here in style on the Trader Merlin show. NASDAQ, which was your catalyst for pretty much the entire year so far, 0.63%, nothing big there. Now, the biggest wager we have right now, and probably the more exciting thing that's moving, is the wager between Big Eb and I. This is for a beer. And it's going to be a tasty beer, whichever way it goes, Big Eb. But we've had a really big rally up in that dollar index over the past 6 sessions. This is probably the most exciting thing I see on the market right now, is how quickly that bond market has done an about face. Now, look where we're at. I'll move this yellow line down here. Not yellow line, this red line. We are smacking right into that 4.5 level. That kind of makes a little bit of a double top here. If we can close above this, then I'm feeling confident in my position on this that we'll see it to continue to rally up here and move to the upside on that 10-year, and then I will gladly take my beer and gloat about it publicly. But yeah, looks like now might be that point where it hesitates and stalls. If it can get through this point and get above 450, then I do think you'll see this 10-year continue to streak up. But at least it's got something with a big trend. Otherwise, most of these markets are rather flat, except for oil. Oil, we talked about this last week where I was saying if we get a close out above this yellow box here, I do think we'll hit that $84 mark, and today was just a giant day for crude oil. We're up $1.84 per barrel, up to 83.38, so we're really close to that. I mean, it's funny how it happens. One of the things I love about trading is how predictable price can be. So I'm not saying there was any guarantee that we're going to shoot up like this today, but when you have something that has such momentum and power like crude oil does, and then it just goes sideways. 1, 2, 3, 4, 5, 6 days, 7 days. Crude oil pretty much did nothing, and then finally got to close outside. Well, it didn't close, but ripped through that. That's just pent up activity on the part of traders. Sideways action like this is just pent up. Traders sitting there just waiting for it to go one way or the other, and then once it finally does go, those algos, those systems, those computers jump in and it's just become buyers or sellers depending on the break, and then it pushes it up to that next level. And that's why I'm interested in this S&P right now, is I really think that this S&P is going through a similar picture. Like, it hasn't had a big break. Now, in my opinion, well, let's go back to historical. If you look at this S&P, it should break to the upside because the trend is your friend until the bend at the end, and that looks like a beautiful trend. That said, we've got this big unfilled gap that happened on June 12th, right there, or sorry, June 13th is when that gap happened. It would not surprise me to see this thing break and then very quickly in one bar close this gap. Thank you, Thomasina. Appreciate that. You need to save that for your school studies there, Thomasina. That should be going into your thesis and getting out of school. Thank you. I appreciate that as well. So we've got two things really going sideways. You have the S&P. I would argue the NASDAQ is kind of in a similar picture right now, but you had crude oil in one and then just broke out. Great. I do think you'll see it stall once we get to that upper yellow box, which we are just about there. And finally, it looks like one big day, but this is actually the problem with futures is it doesn't tell you what happened on Saturday. It doesn't tell you what happened on Sunday. It combines them all together and you get kind of one big candle. So it looks like a 5.49% gain today, but it wasn't. I can show you here down here on the Bitcoin price. You're only up 0.79% on the day because you can see the big move happened on Sunday with regards to Bitcoin to the upside. Now, if you look at these drawings I have here, so remember I loosely drew these a while back where I was saying I think you'll see Bitcoin drift lower after the halving, which was right here, right when that halving happened was April 19th, and I thought we'd see it drift lower. We had this we had this surge up back in mid-May that really kind of had everyone thinking this is it. Here's the rally. I still maintain my bearishness, and we are seeing that right now. It's funny how it literally, I have not redrawn these lines. They have just kind of started right there. I don't think that this is it, though. I really don't think that this is going to be the big rally that starts the move up for Bitcoin. I still think we have some downside move. Remember, July 1st is today, and I don't know exactly the dates of the distribution, but what we should expect to see is Mount Gox's Bitcoin, which is 744,000 of them, I believe. It was 844, now it's 744. It's hundreds of thousands of Bitcoin are now being released to people who've had it for over a decade. And they have massive gains on it. I'm pretty sure a lot of these people want to unload and get rid of some of those Bitcoin and lock in some profit. So I do think you're going to see Bitcoin sell off here. It would not surprise me to see it get back down towards this 50,000 mark where you can see the origin of this big move back here in February of this year. So I'm sticking to it. Obviously, I don't want Bitcoin to go down because I own a decent amount of Bitcoin, and I'm okay with that. But I just think the highly probable piece would be that this is going to sell off even more simply because the coin's coming to market. Michael says, there are more coins coming to this market this month because I heard there will be more coming. Correct. There are more Bitcoin coming to market only because they've been locked up in a legal battle. So there was 844,000 Bitcoin stolen from Mount Gox back in 2011, I believe. And if you actually do that to current market values, it's the biggest heist in the history of mankind, where no one got shot, no one got hurt other than financially. Pretty amazing. Anyway, 744,000 of those have been put back into the estate of Mount Gox that's now going to be distributed out to different people. So yes, they are coming to market. And of course, let's just put yourself in the situation. Let's say you had 1,000 Bitcoin in your pocket and you had it at Mount Gox, right? $1,000 back in 2011, or 1,000 Bitcoin back in 2011 was probably like $900 worth. So could you imagine that you had $900 worth of Bitcoin sitting on Mount Gox and they got hacked and you lost your Bitcoin? Probably wasn't the end of the world. You're not like, oh, wow, this is the end. Man, this is terrible, right? You probably wouldn't be thinking, that's like, oh, I lost $1,000, big deal. However, if you fast forward to today's values, let's just say that we'll put just current market value, 63K. Let's see, 63,000. Times that by 1,000. You now have $63 million. So your $900 investment that you had at Mount Gox, and mind you, some of those people before had 50, 100,000 Bitcoin in there in one account because they were probably miners from back in the day. So there is a lot of people. I know myself, like if it was me and my $900 investment is now worth $63 million, as much as I love Bitcoin, you sure as heck better believe I'm selling some of that. I'm probably going to sell half, lock in $30 million, and now just live the dream and hope the rest of that Bitcoin keeps going up. But yeah, I would absolutely be selling. Lori says, I just wish MicroStrategy did not go down. Doesn't go down with BTC. You know it will. Right? If Bitcoin has a big sell-off, MicroStrategy will go down. But remember, it's not about the next 4 or 5 months. I think in the next 4 or 5 months, it will have turned and now be breaking all-time highs. I had someone over the weekend just grilling me like, well, what's Bitcoin going to be at the end of the year? I'm like, I don't know. I don't care what's going to be at the end of the year. I mean, I think it'll probably be close to 100,000. Because I think we'll get the election part, will start to turn it around. I think there will be a positive move into crypto from the institutions because I do believe that we're going to see a regime change in the United States. I think it's going to be much more crypto friendly. That's not, again, it's not a polarizing myself by saying this political party or that political party, but yeah, I think you're going to see a regime change. Wasn't all Mount Gox money assumed to have been lost, or did they make it back up? So I'm not exactly sure what the recovery process was there. What you had is, yeah, somehow they got it back. So maybe they went after the people that did the hack and got it. I'm not sure. That part I don't know, Liz. I never really looked into how they actually got all this Bitcoin back. Yeah, but they got it back somehow. Oh, you're selling calls. No worries. Hey, sell calls. Keep earning that premium. 50K, don't make me another wager. Oh, look, I hope it doesn't get to 50. I really hope it does not get down to 50,000, but you never know. Stranger things have happened. All right, so I got through the top 8 markets there. Did I? Let me make sure I got through all of them. Yeah, we got to Bitcoin at the top. So let's take a look at what happened for the month of May. And I'm putting this up here just as a reference for you, just so you can kind of see Bitcoin was the stellar victor, right? At 14.68%. You had oil down 5.72. Month of May had a lot of volatility, right? Well, let's look at the month of June, which for anybody who is a trader, had the similar amount of volatility. It was all over the place. Bitcoin, you're down 11.33%. That was your worst performer. Right on the heels of that, you had the 10-year was down 2.27% on their yield. And again, whenever I quote the 10-year, I'm talking about change in the yield. I'm not talking about change in the premium price or the price of the 10-year bond itself. Just I'm talking about the premium change. Russell 2000 was down 0.52%. And then gold down 0.26 for the month of June. Now, this is decent because that means that at least half of these were positive or better. So, dollar index up 1.17%. Your third place finisher for the month of June was S&P 500 up 4.27%. Oil 5.91, and the peak there, the apex of June, 7.19% for the NASDAQ. So all in all, a pretty darn good month, unless you're holding Bitcoin. That was your big loser, down 11.33. But, 10-year down 2%, that's not too bad, particularly when you look at what the numbers were for the previous month, where we had the 10-year down 1.59. So you're seeing the last 2 months showing declines in that 10-year. Now, this all changes when we start to look at what happened for the year. So let's go to 2024. There we go. So this is so far. Again, this is only 6 months into the year. I always start with the worst and work my way up to first. And I love here is, when I look at this, the worst performer in the market this year, out of our top 8 indexes, of course, there's always something that's going to be negative, but out of the top 8 indexes that I look at, the worst performer was the Russell 2000, up 0.83. So that's obviously a really good start when you look at this and you say, oh, the worst performer was up 0.83. Yeah, that's not a bad place to be. Next on our list was the dollar index, up 4.37%. Now, I find this rather interesting. So you guys have heard me talk so much about this. It's probably broken record at this point. But when you look at what the dollar index's impact is on the economy, thank you, Eric. I'll get to that in just a second. But thank you very much for the contribution. I appreciate it. Man, just a great day for donations out there. I love it. Still, Lori wins the top spot. I think she actually goes down as the greatest contributor ever, other than Ed up in San Jose, who made me a wager, but I consider that a contribution also. He contributed $100 to the program. Let's see. So, looking at that dollar index up 0.37%, excuse me. My challenge with it is you're always taught, and I do believe this relationship works, is that there is an inverse relationship between the dollar index and the equity markets. And for that, looking at the dollar index for the year up 4.37%, it would lead me to believe that our equity markets would be down on the year, or at least not really having any great gains, because that dollar is putting pressure on those broader indexes. Oh, thanks. Maybe we can have one in person someday, Eric. Beers are better in person. There you go, Lori. I'm not going to hold you back. So let's run through this. I actually have 2 things I want to look at. MRCI. I'm sure you guys have looked at MRCI's spreadsheet here, but I'll copy it in the chat. This is one that Don Dawson was referencing the other day. I really do think this is one you should add to your bookmark list. It's pretty valuable. So I'll just go here to the DX, right? That's your dollar index. And notice I'm going to go down here to, what is it completely opposite of? It's the exact opposite of the euro, right? That's the easy one. So it would be the exact opposite of the euro, because the euro is a major currency pair in it. It's over 50% of the index. But notice if I go here to, let's go to the YM, negative 17. It's actually positively correlated with the NASDAQ the last 3, it's positively correlated with the NASDAQ, which is strange, and positively correlated with the S&P. That's over the last 180 days. That is, from my experience, having traded for a long time, that's highly irregular. And I don't know what is causing that disconnect, but it usually is an inverse relationship between the dollar and our broader indexes. So that is something that I'm definitely interested in as to why that is happening. But the dollar index for the year so far, up 4.37%, and you can see the correlation here in just a second. Lori says you want to be the highest. There you go. Keep going. Oh, no. Oh, my, come on. I'm going to have to rename the computer. Eric, come on, man. Okay, you guys are really trying to make me blush today. Thank you so much. Eric just threw in $199 into the computer fund. So basically, my computer's going to rebuild itself here today. You guys are awesome. I am turning red again. Eric, I'm red like the color of your tab here on the screen. Thank you very much. I really appreciate that. That certainly does help out, and that will go towards my building costs for all this. So I thank you very much. Man, you guys are all just too good. Everybody's just dropping bombs today. The competition. I don't know what I should have said. There was a prize for the highest donation today. Although I wasn't looking for donations, but I do appreciate all of it. Thank you guys very much. All right, if I can get through this show without just exploding with my blushing color going on here. So that was third place for the month, or for the year so far. Oil 13.71. Again, the dollar should have an impact on the price of crude oil, but it just doesn't seem to be doing it. Right, here's your yearly picture so far. I'm going to zoom out just so we can see the year itself, not the extra stuff. All in all, looking pretty good, although it was up much higher. Right, it was up much higher back in April of this year. Sorry, my phone's ringing. Everything's going crazy over here. Much higher back up in April would have been a much bigger gain for the year. But, hey, I'll tell you what, it looks like we're rushing back up to those levels as well. By the way, let me go on a different tangent here. I really saw an interesting interview with a guy who said, you guys answer this question for me. Who would you say is the greatest oil trader ever? Like in the history of financial markets, there's someone that is like has made a trade on oil that was so unbelievably impactful that they're calling him the greatest oil trade ever, or oil trader ever. And I thought this was kind of fascinating because you never think of this individual as that person that would do something like this. But when you look back at what has happened to the price of crude oil, you could definitely make that argument that this might be the greatest trader that's ever lived. So that trader, I'm going to get some hate mail on this one, is Joe Biden. All right, now hold on. Before I get, you guys are trying to rescind your contributions, hear me out. We have the strategic oil reserves. And by the way, I really got in an interesting argument. I sat next to two diehard Arizona extremely conservative Republicans at the bar this weekend, and they were just like Trump, 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 and like shouting at me. I'm like, look, I'm on neither side. I don't think Trump's the answer. I don't think Biden's the answer. I'm embarrassed actually for the United States. However, Ricardo sent me the video on this one, and I'm glad you did. That was very interesting. So what Biden did is when the oil prices got up so high, and mind you, we are the largest oil producer in the world. But when oil prices got up, into the $100 range, you start selling the strategic reserves. So because we have all this inventory that when the price gets, think of it like a farmer. If a farmer has a ton of corn that he's saving for a rainy day, and all of a sudden he knows that the price of corn is so far above what it should be at, he just sells all of it because he knows he's going to flood the market, lock in that high price, and literally drive the prices of that commodity down. By Biden selling those strategic reserves, which I think there were some people in this room that were like, this stupid, that's crazy. I don't think we should be liquidating completely our strategic reserves, right? That puts us in a pretty dangerous spot. But knowing that those crude oil prices were so high, he unloaded a lot of our reserves at above $90 per barrel. And what did that do? That pushed prices down. We saw prices come down significantly, and now they're filling back up our reserves. And I thought, that's pretty damn interesting, It's hard to... No, here we go, Mimis. That was the guy who said that to me over and over again. He goes, "So you like Trump?" I'm like, no, not at all. I think he's a very bad person. I do not like him as a human being. That's more it. I think he's very unpresidential. Just I'd like the people that treat people with respect and dignity across the board, whether you believe in their opinions or not. I think you shouldn't be abusive to other people. We're all human beings, and yes, we all have our flaws. So anyway. That trade by Biden really did help us out because it did crush the prices of the fuel pump. Now, but this inflation was caused by Biden. No, actually it wasn't. Again, this was the Federal Reserve, in my opinion, did a lot of this. But every president has gone on prolific spending sprees, and Trump's no different. Obama's no big different. Bush is no different. They are all spending. But very interesting that people are calling Biden. I don't call him this, but I think it's interesting to call him the greatest oil trader ever because he was unloading our reserves when we were really high and buyback low. So now we're filling up our reserves with cheaper oil than what we sold, which, hey, I don't see anything wrong with that. It all works great until you get caught, right? So if he had sold our strategic reserves and oil kept running to 160, 180, 200, and all of a sudden we got no oil and we got to buy it at the higher prices, be a totally different conversation and a totally different book that this guy wrote. I think the book is called The Greatest Oil Trader That Ever Lived about Joe Biden. So thought that was an interesting take. I don't believe it 100%, but it is something you can't really refute, that those strategic oil reserves were sold at a strategic time, and it did help push prices down, which kind of flies into the face of Don's argument the other day. I know some people got all excited about this. We're like, hey, the president can't influence oil prices. Well, he technically did by selling those strategic reserves. So I think the president can impact pretty much anything with laws or some utilization of infrastructure that we have. He can certainly impact market behavior. And in this case, pushing oil prices down significantly. All right, let's see how many people I've upset here that are going to now hate me. But I didn't do it. Correct. I don't think he did it as a trade. I think he was doing it because he was getting so much heat because oil prices were so high. So let's just flood the market with oil and push it back down, right? Unpresidential was a display last Thursday night. Just, yeah. They were both pretty unpresidential. It was like literally 2 4-year-olds in a room acting completely immature. I saw a really interesting video. Some of you may have seen it. I believe it was Mitt Romney and President Obama and their debate where they were very friendly, very cordial. They're laughing. They weren't just slathering each other with insults, whereas the other one we saw last week was just like yell at each other, shout at each other, scream at each other, and just incoherent. I know, Ricardo. I know. Well, it's hard to mention. You can't say Biden without somebody getting heated and saying, oh, well, Biden this or Biden that or Trump this and Trump that. But I think it is interesting, though. There is chatter about potentially replacing Biden on the ticket. And that, who knows? He did not look all there. I think we could all agree he did not, whether you like him or not, it looked like he was losing his faculties. And, if historically, us as Americans, historically, we were supposed to retire at 65 and a half. And then based off Social Security and what it was initially planned for, we weren't supposed to live past 70. Well, here we have an individual who not only is working, but he's running the most powerful economy and country in the world well into his 80s. And it looked like he didn't quite know all where he was. So we will see. And we'll see what happens here soon. Yeah, I would too. I want a president that respects people's opinions and doesn't, insult somebody immediately just because they don't agree. A lot of you can disagree with me. That's totally fine. And we can do that as friends without having to be hostile about it. That's the way it should be. That's what politics was 30 years ago. You guys remember I could sit down, whatever affiliation I was politically, I could say, oh, I'm X. And then the person next to me go, oh, well, I'm Y. Hey, let's have a beer and talk about it. And we leave friends hugging and it's cool. Nowadays, you say you're X, and there's the person that's Y hears you, and like, oh, you suck, and you this. I'm like, dude, let's calm down. All right. Steve says, almost anyone other than these two. I thought it was funny. We saw a bumper sticker a couple weeks ago, and it said, anyone under 80, which I thought was really good. Renzi! How you doing, Renzi? Good to see you. Been a while. Hope you're doing well. Just working with Renzi. Renzi, third party is the only dignified choice these days. Seems like it, but unfortunately our system won't let that third one in. All right, I made it too political. Let's go. I'm Merlin. In class, you mentioned your wife. Did you get... No, not married. No, not married. Let's finish up my list here. I want to get this one done, and then I can answer a couple questions, and then I'll have to bounce. At least I'm really happy that this computer is running. I love the wonderful contributions from you guys today. That really has me completely blushing over here, so thank you so much. Let's move up our list here because at the top of the list gets pretty frothy. There's some pretty nice gains on the year. So our 10-year up 13.81%. Remember, this is the gain on the yield. And while we may go lower and we may see wild fluctuations, just remember that 13.81% reflects the cost of capital. Why are there so many no's? Why so many no's? I don't know what somebody knows. Oh. Just because it's just not on the cards for me yet. I'm not there yet, Margaret. Not there yet. But 13.81%, that means the cost of money, to borrow money, is gone up that much. And that's a significant increase. When you have the cost to borrow money increasing substantially like that, that can put a pinch on the economy. However, we're not feeling it, right? I'm just saying this because this is traditional macroeconomic collegiate stuff here. Something's broken. Our market's soaring. Bond markets are soaring. The dollar market's doing well. Things are looking pretty rosy here, but at what price? So top three, S&P 500 was 14.6%. You had the NASDAQ up 17.09%. And the big gainer on the year, which I think that this will change. I think it might even stretch its lead. Bitcoin, 37.21% on the year. So there's your year total. If you're long in any capacity, you should feel pretty happy about these markets at this point because there is a lot of green to be had. Again, I do believe that a large part of these gains at the top with the NASDAQ and the S&P is NVIDIA and Microsoft driven. You look at the Russell, which is just barely up on the year, not really being pulled up by those companies. Now, there certainly are some in there that are in that AI space and catching up with some of the AI hype, But because you have such dilution amongst 2,000 companies, it's really not that impacted. Okay, so from there, I want to go back to our poll for the year, which we start every January. And that poll was, where do we think the S&P is going to be by the end of the year? Steve Wolf says the 401k looking great. Yeah, right? Especially when you compound this with what happened last year. And, you've had some really great, the last 14 years have been fantastic. Since 2009, these markets have, all other than the COVID pandemic, which is what, like a 6-month window slide of just bad, not looking good. Not even that. Not even 6 months. I'll bring it up here just so we can see exactly what that was. Here's your COVID window. COVID was a waste of time, 26 weeks. Okay, so yeah, a little bit, exactly 6 months. That was a 6-month blip in your accounts. Other than that, it has just been nothing but up since 2009. I mean, it's been absolutely unbelievable. Yeah, there's a pullback here that we saw back in early 2022. But all in all, it's been fantastic. So I'm sure many of you are rejoicing on this one. The higher this goes, the higher that this monumental rally keeps going, I would be cautious and say I don't want to give all this stuff back. I might be rebalancing my portfolio, being a little bit more cautious and maybe going a little bit more into assets that aren't as volatile. So should this market have a 20 or 30% correction, you don't give back all those gains, particularly those of you who are right in your retirement. All right, I can't remember, but I was listening to a podcast and economics said the S&P had 15,000 by 2030. Let's draw it in to see how reasonable that looks. All right, is it off the rocker to say that, or is it potentially possible? So what I have to do to get to that level is I have to go and adjust my scaling here. So hold on to a couple of seconds. I'm going to put this on a monthly time frame so I can see. Let's go monthly. That brings us back into the late 90s. Okay, and now to put where 15,000 would be on here. All right, I think this looks a little bit better. So there we go. So here's your chart for that specific hypothesis. And you said by 2030, which means 15,000 by there. I will drag this over so you guys can see the vertical line of exactly when 2030 begins, which is right there. Okay, so you're telling me that you believe, not you, but this analyst believes that we are going to move up 174% in the next 6 years. 6 years. I don't know. Look, I'm not saying that that's impossible. I'm not saying that's impossible. But here's why. And again, I thank you, Naum, for mentioning that. I mean, you've given me a squirrel to deviate from my normal path here. But think about this, and just ask yourselves the question: what would cause our markets to rally 170% in the next 6 years? And there's no wrong answer. There's some answers that are probably not very probable. What would you think was, because for us to get there, we have to have a catalyst, do we not? What would that catalyst be? We could make the argument that it's AI. However, if you say AI and innovation, I give you another argument, which is great. Yes, we may see some significant gains. And I do believe, as Don Fron does, that we're going to see a lot more migration of companies to robotics and automated systems, that the average human job will be replaced maybe by 2030. So let's say we get to, hypothetically, we're in 2028. I got 4 years out from here, and 20% of the workforce is now replaced with robots. That's like Elon Musk thinks it could be even sooner than that. But I got 4 years out, 20% of the workforce is displaced because of robotics. Where are they going to go? Are we going to, these people who lose their jobs, where are they going to go get money? Are they now going to be a bleed on this, or a drain on the system, filing for unemployment? Do we get universal pay? Because now if the more robotics we have, the more jobs get displaced and are replaced with robots. Where's the money going to come from to buy the goods and services that the robots are producing? So if a robot's making, let's say they're TV manufacturers, and it's just all robots making TVs now, great. For the business, it's so much cheaper to make those TVs. 24 hours a day production, no sick days, nothing. It's easy. But if I fired 1,000 employees to bring in 100 robots to replace them, those 1,000 employees no longer have the money to buy the TVs that I'm making. So while it sounds great from an efficiency, productive perspective, I really don't see how we're going to get people to have money to buy all these goods and services and maintain the profits of these businesses. I struggle with this debate. It's a hard one. I don't know where that money's going to come from. Let's see. What do you guys think? Isn't Tom Lee the drummer for the Motley Crue? That's Tommy Lee. Renzi says aliens. Yeah, that might be it, Renzi, because it's kind of like, well, where's it going to come from? Naum says devaluing the dollar. Certainly that might be a catalyst. So you devalue the dollar, which makes our exports grow and people buy our goods and services in more quantity internationally, and that's more sales. Great. That would also drive up inflation. Let's not forget. That's what happened with our current case, right? They printed all this money, devalued the dollar. That caused inflationary pressures. A new invention equal or bigger to the internet. Great one, Steve. And that is actually probably the real answer that would cause that. But right now, that innovation is AI, and that AI threatens to replace us, right? And at some point in the future here, I will be able to upload all 940 shows of TraderMerlin into an AI program and say, scan the markets and do a show in the same style, with the same attitude and the same mistakes, and make sure that he blushes every time someone gives him a contribution. It'll all be AI soon. You won't get any personality. It's all going to be programmed. So where does that money come from to buy these goods and services? I don't know. It's a question I just can't answer. They can all become traders. That's a good point, Lori. I mean, the more people that do it, the more liquidity we get in the marketplace. So to me, that's a good thing. But then again, there's the argument that they will be AI systems and people just have these bots that trade for them all the time. By the way, there's another new scammer going around trying to get your money, saying that he's TraderMerlin and he's going to trade your money for you. Don't fall for it. The start of migration to the stars. That's another good one, Mike. And again, you guys, you may remember, I believe I said it to you, that I believe the biggest IPO in the history of mankind will be SpaceX. If Elon Musk continues to do what he's doing with Starlink wrapped under the umbrella of SpaceX, and then all of a sudden we actually have a commercial product that we can send to another planet like Mars and potentially colonize Mars for whatever resources might be there, or have a multi-planet species, there's going to be trillions of dollars pouring in that industry, and I think SpaceX could be that. And maybe that's it, but, be honest here, Mike, the start of migration to the stars, will that be human-based, or will those be robots that are sent out? I have a feeling it will be a robot-manned mission. Flying that far as a human, takes wear and tear on that human body. When they finally come out of their sleep-induced coma, whatever they're going to be put in, they're not going to be functioning great. I would have I'm the guy, I'd say, I'll go to Mars, and I get there, and the moment I land on the planet, I just have the massive panic attack. I would just lose my mind. I need to go home. I'll go home right now. CMT Association doesn't take anything any economist says seriously, especially in public. Right, Renzi? I think you know as well as I do that anytime you read a headline, an article, a post, a blog, or any highly revered analyst, it's manipulation. It's them telling you to buy something that they have a vested interest in you having an interest in and buying. So I don't believe it either. Neuralink for neurological, that's a cool one. Again, who's this all circle around? Elon Musk. Yeah, I think he will be the first trillionaire on the planet. I think SpaceX is going to be, a multi-trillion-dollar IPO when it happens, because they want to be the first one there. Look, Jeff Bezos got Blue Origin, which, is not doing anything near what Bezos is. You have Boeing as well, and they've got astronauts trapped in space. They still can't get back. What else do I got here? How do the markets look over the last 3 years when factoring in aggregate inflation of over 20%? Well, was it over 20%? I mean, if you look at the inflation number that we were reported, we peaked at 10, right? 10-ish. How's the S&P performed the last 3 years? It's been great. But having a high level of inflation and displaced workforce, in my opinion, are two different things. So to the original question from Naum, it certainly is, it certainly is possible that we get here. All right, it certainly is possible that we get to 15,000. And I do believe we will get to 15,000. However, I don't believe it's going to happen in a short window of time. I think it's going to take a lot longer than 2030, but who knows? If you told me that this was going to happen, I'd have said no way. Based off the double top formation we had here from those peaks back in 2000 and 2007, I thought we would see more of a stair step up. I do think that over time markets are built to go up. I'm definitely a believer there. But I thought this would stair step up, not just go really since these 2009 lows without looking back. I did not see this happening. And to me, it just spells disaster down the road where we're going to see a giant pullback here. But heck, let's be honest, even if we had a pullback from today's levels of 50%, which would be just like, oh my goodness, and going back to remember this .com one back here in 2000 was 50%, and then this one here, the financial crisis, was 57%. So if we pulled back 50%, just 50, that would still bring us to 2,700. We were there back in 2019. I mean, that really wouldn't be that, doesn't seem like it'd be that damaging. Certainly would erase a lot of wealth and cause some problems. But yeah, I think it's possible, Naum, that we get there, but I don't think by 2030. I think that we're going to have this discussion of how robotics are not only impacting the workplace, but the displacement's the piece I'm concerned with. Because I forget, John O'Donnell brought on a couple of real big macros, some big, Harvey Dent, I believe, is one of the guys he brought on to Power Trading Radio. And his answer is always, the jobs will be created. Jobs will come. And it'll just be a natural evolution where one set gets displaced, another segment will open up, and there's opportunity there. But if all of a sudden these new segments are replaced with robotic workers, then I question that logic. I just don't know if it'll continue on. You were at 750 into the 10. Merlin, how do people use Bitcoin to predict where altcoin and the overall market goes? I believe, Eric, that it's a rising tide floats all boat. I believe that the Bitcoin itself is the market for crypto. And if Bitcoin falls 20%, then most likely the altcoins are going to fall 30, 40%. If Bitcoin rallies 20%, then you're going to see altcoins jump 30 or 40%. It's always like this piece that's on a little bit further exaggerated than Bitcoin. So really what you want here is you want success for Bitcoin, right? If you're a fan of digital assets and you want Bitcoin to continue to rise, then that'll bring up altcoins. I hear this altcoin season all the time, and I don't know if I necessarily believe that. I just think that as Bitcoin rallies, altcoins generally outperform Bitcoin just because they're more underpriced. It's like penny stocks, right? In bullish markets, when the S&P is doing nice and it's up, small caps tend to do really well because there's merger and acquisition, people going for the bigger bets on the small companies being acquired. In down markets, Russell usually takes it the hardest because people are now going back to stable big companies, right? I'm buying the Dow 30 as opposed to speculating on penny stocks, and then you see the small caps tank. So I think it's all tied to Bitcoin personally. But it won't be the same. Thanks, PPJ. So basically buying altcoins are leverage bets on Bitcoin. That's the way I look at it. Yeah, I think that's a good way to put it. I think that they are leveraged. Not necessarily leveraged, but they're just more speculative on the industry. So if you believe the industry is going to do well, and therefore Bitcoin does well, then most likely you'll see the altcoins follow suit. All right, I meant to get to this one, and I do have a follow-up vet appointment at 3:15, so I'm going to try to wrap up here before a 1-hour show, even though you guys have bought like a 6-hour show today. Here's your S&P 500 for the day. Let's go and finish this up here. So as we closed out Friday's session, which is when I wanted to do this, the S&P price closed at a price of 5,521.5, which would put us up here, 5,005. There you go, 5,520.5. So that pretty much means that Jeff Manson, who was the guest last week, would be up. It would be correct. Now, right now, we're up to close to 16, 17% for these broader indexes. I think a lot of people here might actually readjust their forecast. I would say we could all readjust. Lisa, you got a 5804. That's definitely in play. Daryl Kimbrough, I don't think Daryl's going to get his number of 83.79 or 75 or 95. But all in all, okay, good luck with that one. But Corey Lane said 6,000. I got Les in here. He's at 58. Lisa's also. I mean, Michael, you got 5,800 as well. Ricardo's at 5750. These are all very realistic numbers at this point. I would not have expected it to be this much. Again, my target was 7%, which is the lower end of the spectrum here. 6.98. I picked 5102. Look, the market would have to drop 10% from current levels to get down to my number, which I don't think is outside of reason, but it is an election year, so I think we'll probably continue to do okay. So I don't have the time. I was going to say I could give everybody a chance here to have a second input forecast here, but these are the ones right now in the screen that you see here that are in contention. At least you have 55.33 is where we closed at today, so that would pretty much be Jeff Manson almost to the dot, almost nailed it. So we'll see. It's been a phenomenal year so far. Ed, up in San Jose, you're doing pretty good. You got 56.86. That would be a little bit higher from current levels, but a lot of you feeling really optimistic and hopefully being rewarded for that as well. All right, what do I got time-wise? 10 minutes left. I got a bunch more questions. I believe all tech innovation has always led to more jobs, not less, at least in long term. And Steve, I agree with you. However, what we haven't seen is robotics be able to do what a human can do, because the human can always migrate and do some other job. But if all of a sudden we're starting to see more and more robots, and remember, Elon Musk says they're doing. He anticipates a run rate of 1 billion robots a year. You heard him at the conference at Tesla's event. He says we get to a max run rate of $1 billion a year. You have 1 billion robots coming into the space that can now have full articulation of hands and mindset of a human being. Where are you going to go? I mean, if you're a business owner, I'm sure many people here would look at it and look at the whole robotic side of things as displacing so many other people. I don't know. I could go on and on about it, but maybe I'll bring Don Fron and we can have a debate, because we had one on his channel. Maybe we'll do one on mine. What is that? Which step away from? So, Michael, this is something I do every year. January 1st, we do a competition where on January 1st, we guess what we believe the S&P is going to be at by the end of the year, right? And there's some people had very lofty bullish hypothesis for the markets. There's others that thought it was going to be pretty significantly down. I need a John Rowland. Oh, I actually have to update these. There's some new ones that got added in here. But there's definitely some. I actually put these in here too. So JP Morgan thought we'd be down 11.93% in the year. They said we'd close the year at 4,200. The UBS said we'd close at 54. So they're still in the running as well. Tom says aggregate inflation over 3 years means the dollars are worth less. So assets have been inflated, really aren't worth more. S&P is worth them. Okay, got it. Recently saw someone speculate that altcoin miners will be transitioning part of their resources to AI processors for revenue. Any thoughts? No, I don't really have too many thoughts on those. There's not a lot of money in mining. It's just the margins aren't there. You know, I ran for my classes in crypto. I've run all the numbers, and there's under no circumstances is there any crypto I could mine out of my house, given my electrical costs, that would make it worthwhile. Now, if we can get free energy, right? If we can get free energy, then all of a sudden the metrics change. But are some of these miners switching over? I'm sure they would, because a lot of them are using GPUs. So those GPUs could be run to a lot of different other applications. They could also, instead of mining, as say Bitcoin, they could be part of a decentralized network like Render or Golem or Storage. These types of programs allow you to utilize your resource and get paid to use those. But that's a totally different business model. So I do think you'll see a change. Of course, he's a futures guy. Who's that? Jeff Manson. Do I think the S&P rallies? Zaza Wicks says, do I think the S&P rallies through 2024? I don't believe it does. And again, I don't know. I have no crystal ball, even though I got a magical name. Do I think that this is going to rally through to the end of the year? I do think it's going to continue to drift up. But I don't think you're talking strong rally. 1 second. I put the wrong mark on the screen. I want to put a line up right through the end of the year, because that gives me an idea of how much time I have. There you go. It's December 31st. So between now and that vertical line, there's plenty of time. There's a lot can happen between now and then. I certainly don't think that this trajectory that we've seen so far this year will maintain itself. I think it's going to start to slow down. I think as we get nearer to the election, you're going to see a lot of volatility. I actually am of the camp, I think that Biden will be replaced. I know it seems crazy and inconceivable, but I think the Democrats right now realize after that debate that there's a problem. And all the best of President Biden, but the chances for him to win re-election in that state, I think, diminishes the Democratic chance significantly. So I have a feeling you're going to see that a new candidate put on the ballot. If that happens and Biden's now removed, I think expect a lot of volatility, because you just have a complete unknown, right? If we keep the current administration, markets know what they're going to get. If we go with Trump, the markets know what they're going to get. They've experienced Trump's policies and how he acts and what it does for the market. So, with these two candidates that we have, it's a fairly predictable market reaction, and therefore I think they would probably continue to move to the upside. If there's an upset to that, a new apple cart, if you will, I think the markets are not going to be very well receiving of that. And I think you're going to get a lot more volatility, particularly in the next couple months. So I don't see it rallying aggressively through the end of the year, but I do think you'll probably see it go slightly higher from here. I'm bullish, but I think with manufacturing less than 50 for the last below 50 for the last 3 months, and unemployment rising, I'm diversifying now. There you go. And that's the big thing. I mean, Big Eb's, he's doing the right thing, but he might be wrong, right? Big Eb, and I'm sure many of you also fall in the same category of, you've got some significant gains. This market has been Christmas that just has been giving and giving and giving. You know damn well that's not going to last forever. So at a certain point, you got to go, hey, I'm really happy with what I got. Do I lock in some profits now and protect myself and give up some future gains if it happens, but also limit my downside if that happens? Because it's just a probability game. And what's the probability? That we have another 17% rally by the end of the year? I mean, it could. It really could. But the probability, in my opinion, diminishes just because of you look at historical probabilities and read Stock Trader's Almanac, you'll see that markets don't really run like that long. There's going to be pullbacks along the way. So yeah, it's probably best to be defensive. And the worst thing that happens if you do get out and lock in profits or diversify, and give up some of the upside, the worst thing is the markets just keep on rallying. You'll still make some on the pieces that you're in, just not as big as percentage. Fine. That's great. What you're hoping for, Big Eb, is that when you do diversify, all of a sudden, it comes crashing back down and you're left there smiling going, yeah, I'm in cash or whatever it is. The market's down 30, 40%. You're like, oh, I'll buy back in now. Well, those are the dream opportunities, but they don't happen too often. Didn't Kroger beat earnings? This looks undervalued to me. I don't even think we have Kroger's out here in California. The old KR. All right, let me look at Kroger's here for you, Michael. I don't think you can go wrong with grocery stores. Food will always be something that's needed. Now, so your Siri, you look at that big picture. For 2022 through just a couple months ago, this thing was flat and sideways. It broke, and now you came back down, and it looks to me like you're retesting it. So this is one of the rare times, Michael, that I would say I actually think you're probably okay with Kroger right around that $50 mark. But again, I don't know the fundamentals of it. I just know that grocery stores are always going to do well. Kroger is as well established all around the United States, except California. So that one definitely looks good, and it sells food. Your Siri and BlackBerry and all that other stuff, get rid of that stuff. That's just, I know you're going to gloat about it. You're going to be like, oh, look at Siri. Yeah, Siri had an update. Still don't think we've totally turned the corner. Although I will say, from a bullish perspective, Siri had that sell-off last week, right, Monday through Wednesday, and then all of a sudden started to bottom out, and now it's challenging again. So this may be that cup and handle formation where it kind of reverses here. If you get above that $3 mark and get a close, then might be singing a different tune on Siri. But what do they really do? Nobody likes Siri. Nobody uses Siri. All right, that's going to do it for me for today. I think I had some economic announcements for you for the second. Nothing was really that big out there. Here's what you have. You have a presentation in Europe. So this is an ECB central bank conference. It's just about central bank policy. So I don't expect this to be anything exciting. However, you guys all know that when Jerome Powell speaks, markets can go haywire. So this is going to be in the wee hours of the morning, 6:30 in the morning, California time, right in the open. Lagarde and Jerome Powell are set to speak at that conference. You also have JOLTS job openings. You have Ward's total vehicle sales, economic optimism, and that's pretty much it for your day for tomorrow. Earnings-wise, there's nothing to even speak of with regards to earnings because it's all about what we got 2 weeks out, I believe, is when all of a sudden everything starts. I haven't looked at that one. DJT, what's it doing? It's still not down. I remember I had a bet with Mike LaRusso here that would be below 18, and I got really dang close. I was a pretty aggressive bet, but yeah, here we are drifting a little bit lower. We'll see. Let's see. I got to go. I don't want to do an hour show here today. Yes, I'm glad there was a show today as well. Let me wrap up here. Thank you guys so much. Before I start turning red again, that was very generous of all of you that contributed. I saw some monstrous contributions, unlike anything I've ever seen in the program before. So the giant donations from Erica and I got, the list should be long. Lori, another, the PC is still named Lori. I'll come up with something else for you, Eric. But again, all of you that contributed, thank you so much. I do appreciate it. It means a lot to me. And yeah, I enjoy doing the show because of that type of stuff. Just because I know you guys enjoy it. You're here every day. You've almost made it part of your workday, as I have as well. So thank you guys so much. I'll be back tomorrow. I'm doing a show Tuesday, Wednesday, and Friday. Do we do a show Friday? Everyone's going to be gone. So Thursday's a no, because that's 4th of July. Do we do a show Friday? Yes or no? What do you guys say? Yes or no for a show on Friday? I don't think we should, but I could do one. I don't know. I might be out doing something, but I mean, if you really want one, maybe we'll do one. It's going to be a boring day anyway. What do you guys think? Show on Friday or yay or nay? I know what you're going to say. You're all going to say, yes, make it a 2-hour show. I know the way you work. and by me asking you this, it's now turned it into a 1-hour show. Oh, I've got 3 no's. 4 no's. Wow, guys. I'm taking Thursday, Friday off. The no's have won. Man, sorry, guys. Happy anniversary, Lori. Hope it's a fantastic one. All right, we're going to do no show Thursday, Friday. So I will do a show Tuesday and Wednesday. I think I'm going to have a guest on Wednesday. We will see about there. So All right, so no show Thursday, no show Friday, but I'll see you guys tomorrow and on Wednesday. So take care, everybody. Thank you guys so much. It really means a lot to me, and I appreciate it. I will see you guys tomorrow. Take care.